Hello and welcome. You are watching Market Wrap, a weekly update on equity markets and outlook for next week with Mr. Pankaj Pandey, Head Research, ICICIdirect. Very good afternoon, Pankaj, and welcome to the show.
Hi, good afternoon.
Pankaj, Sensex and Nifty gained for straight fifth week despite of the fall in the profit booking that we saw on the Friday session. Nifty nearly missed 18,000 target by a fraction. How do you see markets panning out from here in short to medium term?
So, Gitu, from a shorter term perspective, since markets have seen five straight weeks of gains, have rallied nearly 18% from the lower levels. At psychological levels of 18,000, some kind of a consolidation is what we would expect. So on a Nifty, our sense is that probably 17,500 or 17,200 is where the support lies. So that is where probably profit taking can sort of take down the index to lower levels. But when we sort of look at from a fundamental perspective, we have just concluded the result season. Nifty EPS for FY24 is revised downwards by 2%. And for the quarter, we are seeing about 14% kind of a drop in Nifty EPS at about 177. But despite this, we feel that given the fact that companies have given a very positive commentary, especially on the cost-related inputs or the raw material inflation, what a lot of companies have been facing, our sense is that these numbers will subsequently see a improvement going forward. And which is why we feel that Nifty 12-month target is, according to us, is about 19,425. And I think in the second half, our sense is that since you are seeing the beginning of the festive season, so in the second half of this fiscal, you'll see a lot more better industrial and overall consumption activity sort of picking up. So that should sort of lend to a better momentum. We have seen already GST collections even in a subdued quarter being elevated compared to what we have seen historically. So overall, second half is where we expect a lot more positiveness to come from the overall business improvement perspective. And which is why we feel that Nifty is slated to sort of surpass previous highs of 18,600.
19,425 is the target that you have set for Nifty in next 12 months target, right? Pankaj, so which are the sectors that you think are structurally well placed to really lead this rally for Nifty?
So I think capex-linked sectors like capital goods, domestic consumption plays, especially autos plus real estate plus I think other discretionary segments are I think slated to sort of do a lot more better compared to the rest of the overall segments. And banking and financial services ideally will perform in line with the markets. That is what our broader expectation is.
If we see from June 12, when the Nifty formed a bottom, it is a rally of around 16%. I think some people are calling it a bear rally. Some people are calling it a turnaround for the markets. Nifty Bank has also performed well from the low of June 17. It is up by nearly 20%. FMCG also did well, up 20%. I mean, in all of this financial sector, which you think is going to really lead the rally from here, which is the segment in the financial space that you think is appropriately priced and valued? That might see the that might be attractive for the investors to really start investing.
So I think in banking and financial services, obviously the best risk reward plays with private sector banks. And here we have seen across broad-based growth across segments, largely driven by the retail and the MSME segments. So that is one segment which is sort of done well. We have seen PSUs also sort of gaining traction because of number of reasons. One, the credit growth has picked up. I think the corporates which were sort of borrowing overseas, largely it is expected that probably they'll sort of borrow more domestically, which is where the PSU sort of cater to. So from that perspective, PSU selectively are also looking good. Current PSU valuations are also quite cheap, ranging between half or 0.4 book to about 0.7 book. And I think they are the biggest beneficiary of the decline in credit cost because PSUs were having significant amount of asset quality concerns. I think those concerns are sort of behind us. So from that perspective, SBI, Bank of Baroda, and Canara Bank are some of the preferred picks. There are some segments which have not really been doing so well up till now. So, for example, AMCs. Now, AMCs have seen a reversal this week on the back of one. We have seen market sort of rallying. So, obviously, AUM for these AMCs have also gone up. The other thing is that we are continuing to see a good decent amount of SIP inflows, and then the overall proportion of debt contribution to overall AUM is also sort of coming down, and equity is sort of going up, which fetches better margin or better spreads for them. So that is why that is one of the things. And in life insurance also, we are seeing uptick in some of the segments, like say, for example, home protect segment. So people who are sort of buying home loans are buying insurance also, commensurate with the home loan. And
Right.
then you have ULIP-based products, which are market-driven products, are also sort of finding favor. And which is why I've seen even the life insurance companies or have also sort of done well. And on top of it, I think there are some B2C NBFCs like Bajaj Finance, which have sort of given a very aggressive growth guidance. So I think all these are sort of pseudo consumption driven segments. So from that perspective, I think bits and pieces of all of these is expected to sort of do well within the overall BFSI as a space.
Pankaj, do you expect mid caps and small caps to relatively outperform going forward?
Absolutely. I think for the next 3 to 5 years, I think Nifty is expected to sort of do well compared to global markets. And since domestically we are poised very well, our sense is that the mid caps and small caps will structurally outperform the large caps, which is Nifty. Now, in Nifty mid cap, what we are also seeing is that last 8 weeks of declining trend has been sort of reversed. And I think small cap is about to sort of do that. And our sense is that when sort of Nifty consolidates between say 17,500 to 18,000 kind of a level over the shorter term, I think stock specific move in the mid cap and small caps is where we will see action sort of coming in. So structurally, we expect next 3 to 5 years, mid caps and small caps are placed well, given the fact that their earning trajectory is going to be higher compared to large caps.
Let's talk about the monsoon. The cumulative monsoon is expected to be, as of now, the data that has been released, I think 2 days back, it is 10% above average, which is good for a country like India, which is too much dependent on monsoon. Uh, it is always said that when there's a good monsoon, rural demand picks up. The demand which has been dented because of the COVID crisis that we faced for the last 2.5 years. Now, which are the sectors that you think are really going to benefit from the cumulative demand which comes from the rural sector?
Now, when you sort of look at say monsoon one, I think this is the fourth year of near normal monsoon what we are witnessing. Now, there's some concerns in specific regions or rice growing regions where the acreage is lower by about 12 odd percent. The rest of most of the other agri commodities acreage is more or less fine. But I think our sense is that it may not really impact inflation given the fact that Food Corporation of India is sitting on an inventory of about 28 million tons. Last 4 5 year historical average is about 25 million tons. So obviously their inventory levels are higher than the historical average. Now, when we sort of look at FMCG companies, typically overall commentary has been that the rural demand had been sort of slower, largely because of the commodity-led inflation translating into higher product prices. Now, with crude remaining sort of range bound or on a lower side, and with overall production being better, our sense is that rural demand will sort of pick up in the second half. And from that perspective, it will benefit a host of sectors. Say, for example, even within paints, the lower valued products were not really sort of flying off the shelf, largely because of the kind of price hikes what companies are taken. And same is the case
Right.
has been with FMCG companies overall. So from that perspective, I think with normal monsoon, expectation is that you will see a pickup in the rural demand. And that will benefit right from BFSI to a number of sectors, including FMCG and say other consumer discretionary categories. But having said that, FMCG is one sector where the valuations are quite rich. We've seen 5 to 6% kind of a volume growth in the last 3 years to sort of exclude the COVID-related volatility. So lower growth and higher valuation does not look like this segment is going to structurally outperform the market.
Pankaj, let me talk about FMCG here because we have always been saying that FMCG stocks are richly priced, richly valued, but FMCG is a sector which is doing well. So what is the reason behind that?
So when you sort of look at rural demand is definitely impacted, but when you still look at the urban demand is fairly robust, and you have number of data points to sort of look at. When you sort of look at the luxury car sales, that has been sort of very robust. If you look at the higher price point two-wheelers, that segment has been sort of doing well. When you even look at the premium segment within the FMCG, for example, Tata Consumer, the salt businesses, or the premium salt business or the rock salt business, for example, as an example, is sort of doing very well given the fact that it is a very premium product compared to a traditional salt product. So urban demand has been sort of holding up very well. It is the rural demand which has been sort of impacted. And same is the case with even paint companies. I mean, the repainting demand is good. The demand for premium product is good. So from that perspective, urban demand is sort of holding up well. It is the rural demand which has sort of witnessed a slower growth or where there was limited growth. And that sort of impacted companies depending on how their mix has been.
Let's talk about some of the sectors. Banking, you already spoke about. Insurance sector, how do you see the insurance sector really panning out? Because we have been seeing some kind of attraction in counters like SBI Life Insurance, ICICI Pru, but companies like HDFC Life is not performing the way it needs to perform, catching up with the other stocks. So what's your view on the overall insurance sector?
So insurance sector stocks have done well this week because we are seeing a good amount of traction. So we've seen about 50% kind of a growth in April to July kind of a premium. Now, one is most of the insurance companies are also sort of coming on a high base because last year the demand for term products were substantially higher, which is the highest margin product for insurance companies because of the COVID-induced anxiety. And so from that perspective, that particular product is also kind of a sort of a slow moving. And then ULIP is something which has been sort of picking up, which is not a very great margin kind of a business. So mix has been sort of, so for example, HDFC, the term product is quite substantial for them. And if there is a sort of a slower growth there and it is impacting their growth overall in premiums and hence even the stock price performance. Compared to that, SBI Life is sort of fairly, has got a decent mix of all the major products. And which is why it is sort of doing the best, and ICICI Pru lies somewhere in between. But our sense is that once this COVID-induced challenges are over or the base is over, you'll see a steady growth in the insurance as a business overall. So I think it's a matter of time before some of these segments start to perform.
We have seen a strong recovery in the office space, commercial space and malls, because I remember when we were all coming out of the COVID crisis, you were the first person who said you would be clearly watching on the unlocked trades, and real estate is one of them. Recovery in the malls, the PVRs, multiplexes that we all spoke about. Now tell me, what is happening in the real estate space? Because malls are all full. On the weekends, you don't have space to really dine there.
Absolutely. And I think our sense is that it will get even more crowded going forward, given the fact that the festive season started. Now, when we sort of look at or speak to companies, there is a strong recovery in the office and the malls. And mall segment recovery is much above the pre-COVID levels, and which is why you see too much of a crowd. And leasing activity on the office side is also sort of picking up, and which is what we have been sort of getting from most of the commentary. So, for example, even for Brigade, the sales consumption has been higher, or the retail sales have been higher than 35%. Similarly, rental revenues for them on the office side has also been sort of seen a substantial jump of over 50 odd percent. For Oberoi, again, when you sort of look at for mall, the revenues what they have booked in this quarter is about 37 odd crores, nearly 10 times compared to last year. Obviously, that was a sort of a low base. Something like Phoenix, the retail rentals have crossed 124% of the pre-COVID levels, and in July, this from that perspective, overall retail as a segment has been sort of doing well. And the good part is that most of these companies are very aggressive in terms of capacity or retail space addition. And our sense is that next 2-3 years, they are going to do even more better. So I think this is one space which is looking attractive even from a portfolio perspective. I mean, in terms of stock, it could be Reliance, which the Reliance retail is obviously a part of it. Trent, Titan, so all these names have been sort of doing exceptionally well pre and post COVID, and expected to sort of keep doing that similar kind of a tempo.
We have seen an uptick in base metal prices in this week's session because it is expected that European capacities may be curtailed because of the high energy cost there. So, what is your view on the base metal prices, especially zinc and aluminium?
So when you sort of look at Europe, so Europe ahead of the winter, they are looking to sort of buy a lot more gas and energy, and that has sort of propelled the energy prices at a significantly higher level. And obviously, with that in perspective, companies or smelters there cannot remain competitive, and which is why we have seen zinc sort of rallying up or has seen the sharpest uptake. Now, the thing is that one of their global zinc and lead player, which is Narestar, is looking to sort of put their plant under maintenance from September 1, largely because of the higher energy cost. Similarly, in the aluminium side also, there is an expectation that smelters are expected to sort of to be closed down. And mind you, these are high energy consuming segments, and which is why it has sort of benefited zinc. Aluminium, it has not benefited to that extent because the Chinese exports have been sort of inching up. But our sense is that overall aluminum as a commodity remains in short supply, and so price-wise, it will sort of again head higher. It is just that in the near term, it is finding pressure because of the oversupply from China.
Pankaj, if we talk about power sector, we have been waiting for the reforms for long. You know, there were initiatives taken up by the government, but that didn't work for this. And now we have one more step taken up by the government, the defaulting states barred from power exchanges. So what does this really mean for the entire power sector as such?
So one is, so the bigger reforms are still sort of not happening in the power sector, despite the fact that the overall power demand is extremely high. And I think, so we don't know when will that bill be introduced in the parliament and how that will sort of pan out. But I think it's a baby step what the government has taken. So basically they've told 13 states that unless you don't clear the late payment surcharges, which is worth about 5,000 crores, they will not be allowed to sort of buy or sell power in these spot exchanges. So I think this is the first time we are seeing a bit of a aggressiveness from the center in terms of curbing states to sort of give up that tendency of paying late and even sort of not paying the surcharges also. So it's a sort of a baby step towards correcting the behavior of a lot of discoms. Now, it is not expected to have a far-reaching impact, but yes, incremental, one can say it's sort of a positive. It is a bit negative for a company like IEX or other power exchanges where the states have been sort of buying and selling power. Right. But I think this kind of a overall measure is the right step by the power ministry to sort of make ailing discom become more effective. But yes, the bigger problem still remains.
So from today, we are starting our special segment called as Hidden Gem. So Pankaj, which is the stock that you're going to talk about today?
So we all know that electrification is a theme is sort of picking up. We have seen Mahindra and Mahindra launching a slew of products. Tata Motors have been sort of talking about, the two-wheelers also have been talking about. Now, one of the companies which have been there in the existence for long, but not really sort of known is Greaves Cotton. Here we have a target price of 210. The market cap of the company is about 4,000 odd crores. Now, this company is a leading diversified engineering company with presence in the automotive and the non-automotive space. And the good part is that their EV business is now sort of taking shape. They've raised about 1,071 odd crores overseas, and that should sort of add muscle to their overall EV business momentum. Currently, EV business is contributing about 38% of their sales, and last quarter numbers were quite good. So they did a two-wheeler volume of about 28,000 odd units. The three-wheeler volumes were somewhere about 790. And they have set up a capacity of nearly 240,000. So at that kind of a capacity, the peak revenues could be about 2,000 odd crores. But our sense is that the company is well on track to clock about 1,000 crore kind of a revenue this year. And good part is that last quarter they've made 20% gross margins and 5% kind of EBITDA margins. So our sense is that this is one company which is sort of silently sort of doing a lot more better, especially in the EV as a segment side. And we expect revenues for this company to grow at 19% and about EBITDA to sort of grow even more handsomely. So on some of the parts basis, we feel that given the fact that this company is typically, when you sort of look at EV businesses, valued a lot more higher. Here, we have valued it very conservatively. So from that perspective, our sense is that this company holds good promise for the future.
So the hidden gem for this week is Greaves Cotton with the target price of 210 rupees per share. IT companies have seen a bit of recovery from their lows. Large caps have also performed. In the mid cap space, IT companies are also performing. So is this recovery that we're seeing in the IT space sustainable? And do you see this kind of a momentum to really go forward and move to broad-based and cover the entire IT space?
So in IT, I think while the momentum had been sort of disturbed, but overall structural trend remains intact because there is obviously an urgency from global companies for cloud transformation to remain sort of more effective in terms of doing business. While there has been some pockets, especially in the retail or in the BFSI, where we have seen some bit of a weakness. But overall order book for most of the IT companies continues to remain healthy. There has been margin pressure expected to remain for the next 1 or 2 quarters. But our sense is that that will sort of cool off given the fact that the companies have been very aggressive in hiring freshers. So they are sort of correcting their employee pyramid. And the other thing is that the offshoring cost has been very high for companies given the fact that there was a shortage of talent. And so that also should sort of come off. And in fact, so for some of the companies, it has been double digit. So from that perspective, our sense is that the cost will also moderate. And as a result of that, you will see better margins. There has been some companies who are also sort of looking to sort of get price hikes. Not all of them and not in all the projects. So from that perspective, our sense is that risk reward wise, IT as a sector looks good. Obviously, FI selling pressure also will have an impact, but our sense is that overall IT as a pack is offering one of the better risk reward at this point in time. And so from that perspective, stocks like Infosys, TCS, Coforge, Mindtree, Persistent, and Emphasis are looking good to us.
Pankaj, so what are you strategizing for next week? How do you expect the market to stay next week?
So since markets have been closer to or have reached closer to 18,000 kind of a levels, and at these psychological levels, obviously consolidation is expected to play out. So buy on dips is what people should look at. So somebody has sort of not really participated earlier, I think they can wait for this kind of a consolidation in specific stocks to sort of buy on dips. So Nifty may not really do much from this particular kind of a range, say 17,500 to 18,000. But our sense is that specific stocks in mid caps and small caps selectively will do well, and wherever numbers have come out with, I think those are expected to sort of do a lot more better. Given the fact that in this last say 30 days you had number of results, I'm sure a lot of people haven't really had time to sort of go through each and every numbers. So I think once that numbers are digested, we'll see stock specific moves going forward.
Offhand, if you remember some of the mid-cap companies that you are positive on.
So I think there's a long list. Probably I'll do a segment, especially on the mid caps
Right.
and small caps, where we have been, where we are sort of structurally positive in the reasons there. That one.
That would really help our viewers. Pankaj, thank you so much for your time. Pleasure speaking with you, and you have a nice weekend.
Thank you so much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.